the two A+ trades that presented themselves on Friday the 13th, January 20, not January, March 2026. Um, so first trade actually presented itself pre-market. What I really liked about this trade is, there we go. If I can show you. What I really liked about this trade is we had, if you go to the 5 minute, we did have valid LRLR, right? So this low resistance liquidity right here was just waiting to get ran. What makes this kind of A+ low resistance liquidity to me is that we're not rejecting any higher time frame gaps to the left of us. So this is right here. We wick this 5 minute gap, we push lower, same thing right here. That is not A+. But then if we look to the left of us, we're kind of mitigating these gaps. And then we see we're just leaving pure wicks right here. We're not really rejecting off of anything. So that was my first indication of my draw on liquidity. So now what I'm looking for here is we have this market maker buy model here. So what price ends up doing is coming in pre-market. We have sell side of the curve where we engineer all this liquidity. We have this sell off. Now from here, what I really like about this trade is we have a protected low here. So what happens is this is our manipulation leg. We get a resweep of that low. This makes this low protected. I do not want to see price come back lower than here. And then we do end up getting this 5 minute volume imbalance right here with these candles, which absolutely gets ran through right here. So you see we're kind of respecting it. Once I see this huge displacement, this is where I'm entering on the change in the state of delivery here. So you're waiting for a pullback, and then I don't even have it. What you're doing here is waiting for a pullback after that change in the state of delivery, and then you're entering purely off the momentum of this candle. So that is something I really liked about this trade. And then another thing is for your targets, obviously you would have targeted the low resistance liquidity that presented itself, but also if you anchor your standard deviation levels here, you see max expansion of standard deviation aligns perfectly. Well, we wick it, but even with a 10-point stop, if you wanted to ping pong this trade and kind of long from there, you could have gotten away with a 8-point stop and then targeted that low. So yeah, that's what I really liked. But yeah, that was an A+ long that presented itself to me. Again, we have valid LRLR. We have this market maker sell model. So we end up coming in, engineer liquidity. We sweep that liquidity, which ends up becoming, we don't end up sweeping liquidity. But we sweep this low, and then we target opposing draws on liquidity, which is this high, and then your standard deviation level. Now from here, if you missed out on this trade, don't worry. Another one presented itself. So at market open, what we end up doing here, if I go to the 1 minute, we have this internal turtle soup. So pretty much what we do here is we come in, market opens, I think right here. Market opens right here. We come in, sweep this high, and then we get an immediate move lower. So after that, what I'd like is we put in this 1 minute imbalance here. So this is my deciding factor. Right here. So this inversion would have been my first entry, and then I'll explain why. So pretty much that hourly gap that was presenting itself right here, this is what I wanted to see hold, and I did not want to close below this hourly gap. So pretty much we have two hourly gaps stacked. This first one right here acts as my breakaway gap. I don't want to see price return to this gap, because if we're truly bullish, we're going to respect this gap and then go to the next previous high, or in this case, this unfilled hourly gap. So we end up filling the gap completely, and then we get them move lower. But we end up holding this hourly gap at open, and then the actual entry here is entirely based off this 1 minute inversion here. So we get this 1 minute inversion, and then we ride it Ah, shit. All the way here. With your stop at the swing low, of course, but there you go. Those were two excellent trades that presented themselves to me. I really enjoyed those trades. I know a lot of people ended up taking continuation shorts. We did have stacked equal lows. I think it was just too late in the trading day and also on a Friday that, you know, you just got to hop off the charts. But yeah, two really good trades to secure your winning day. And yeah, I hope you guys found this helpful in some type of way and kind of learned. But yeah, thank you guys for sticking to the end here. Yeah.